Good afternoon. It is currently Tuesday 24th of November. Whoops. I just hit my phone on the corner of my table. I'm gonna kind of just take you through my backtesting and my workflow. So I just wanted to note that the software I'm using is TradingView right now. Obviously I'm gonna put a plug. They're having a Black Friday sale. It would be kind of rude if I didn't kind of let you guys know that it's the biggest sale of the year. So if you guys wanted to snag up an upgraded plan that actually allows you to go backtest and use the bar replay tool, then definitely go check it out. There is a link in the description. So like one of the reasons why it's so hard for me to actually film these backtesting videos when I'm actually doing my actual backtesting is because I've got to like set up the camera. So we're gonna put that away, make a stand using this Amazon box. Got my water. Alright, let's see how this looks. Okay. Alright, I'm in frame. Now we can start the backtesting. So here I am on TradingView and I currently have these vertical lines set up on the 1st of October and then the 1st of November. So I'm going to be backtesting 1 month on Aussie dollar. I'm on the daily time frame. Now with the upgraded paid plans, you can actually just go back in price. I want to say that they removed it for the free version. So again, this is just one of the perks of investing in TradingView as a software, because then you can backtest your strategy, your plan, and so on. I bet you guys thought I was going to say etc, etc. Anyways, we're going to jump into the 1 hour now, and all I really do is play price forward. If I see a setup, I kind of share a little bit of what I'm looking at, and you can check the link in the description on sort of a strategy that I did learn from. So let's start backtesting. So actually, I want to actually talk about this trade real quick. We had this push up, and then what I tend to look for when we're looking for a push up is obviously that showcasing momentum, and then as I've always said, that we get a flag to continue the push up. I mean, just looking at nature now, we're getting this sort of ascending, so for me that could be signifying a reversal, or that we're just changing and shifting into different market nature. Now, how I kind of enter this sort of trade is, it's the same principle of a flag, but if we really look into the nitty gritty side, like concepts of a flag and the reason why it has a descent, you know, these sort of flags are better than, you know, a flat kind of flag. And if you actually go study flags, the ones that really play out are the ones with this sort of descent. And if you're looking at it at a really atomic granular level, it's because we're breaking these lows, getting people caught on the wrong side, grabbing liquidity, getting on the retrace before the move goes up. So essentially how I enter is, we have this push up and we usually have a first low, and then price may range around, and then we essentially break, and then we go. Once we've broken this, we tend to get a retrace, maybe even a doji, or we don't get in at all, and price just goes without us. And for those who do trade patterns, that would call it a flag. So that's just a way to look at it, and what I'm using as an entry criteria. Here we've banked 0.39%. The reason I put this in a box was because I was going to talk about it at the end, but this was a good entry that I was going to take as a retest back to this inside bar level. And again, this is just an indicator. I'm going to put it up on the screen for those who are going to be wondering why I have these orange candles. But however, seeing how price just retraced so rapidly, this is not a trade that I want to be in, because what happens after the impulse, I would have much preferred to see either a descent or an ascent, to back to this level here, and then we go. But after that retrace candle, that's kind of like a no-no. That's like red flags. Anyways, let's continue. So I just wanted to stop it here again, because how price is behaving right now is that there's not really, it's kind of range bound. You can tell by how we're ascending here, then we come down, we pull back, we come down, we pull back, we come down, we pull back, we come down, we have this little descending here, then we push back up, and then we pull back down, and then up, and then, so right now the market in simple terms is just range bound. It's corrective. It's not the kind of price action that I want to get in with, especially how I trade. For those who are scalping or have another strategy, you know, this could be very lucrative for them. So let's just see what happens. What I'm seeing here already is like, we have this descending channel, which for those who do trade like patterns on the larger screen of things, this could be a bull flag to the upside. Now we've sort of broken this, but we've broken it with a wick. With this wick, likely to see some sort of range or corrective behavior. But let's see if we continue up, or if we just end up breaking highs, retracing, and then coming back down into the pattern. So we're having sort of this, okay, this looks nice. So my thought process right now is, yeah, we've had that range, and then we've pushed out, and then we've pushed out impulsively. So in fact, I could look to take a retest. Essentially, again, the market's not perfect, so when I draw these schematics, they're kind of like, you got to take it with a pinch of salt. Essentially what we've had is this impulse up, we've had this descending, we've had a push up, and then essentially we're just going to take a retest to continue to the upside. And you know, that's usually at some kind of level. Sometimes people take it at this level, sometimes people take it at a level that's actually more recent here. In this case, I'm going to take it at the most recent low level, which is actually on, we just look, it is actually this candle, this, let me just put a box around it, this candle here. Don't know if you guys can see that, but essentially I'm gonna have my entry a couple pips above it to make sure that I, you know, get tagged in. And this is something that you can test. You can test 1 pip, you can test on the high itself. So the high of the candle is 502, so we're gonna do 22, which is here. I'm gonna do 12 pip stop for this. And we'll see if we get to triggered in. And here we were in about, you know, around 4 pips drawdown. And you can see that we were just tagged in with a wick, and then it goes. Right now I'd actually move it to break even. So the reason I sort of got into this trade is we're out of this sort of corrective structure, and usually, you know, once we've had a springboard to the upside with momentum, likely it's nice to sort of get that continuation and then getting on the pullback. Because the thing is that I found with my back testing is that I could get tagged in and tagged out. Like if I just keep taking retests all over the place, for example, you know, I could take it back to here. Let's say we haven't seen what's happening on this side, but you know, you could say this is a push up, and then we get on the retrace at this level, get in with this wick. There's a massive difference between that little impulse within the structure, but then actually breaking the structure. So that's what I found from my back testing. Again, this is just from how I trade and how I see the markets. So, you know, yes, this could have been an entry, but it's not one that I would take. So here, how I'm really trailing it is, okay, so this line isn't showing sort of the wicks, but how I'm trailing my stops is just below the recent sort of structure lows. So again, for beginners, market trends like this, and once we break this high, then we get this low. Once we break this high, we get this low, and this is how I trail my stops. Once we break this high, we trail the stops to this low. So essentially I would trail my stops to here, but we'll have to see with the wicks on the candles. Essentially it will just be down here again. And you know, you can trail it to the bodies if you wanted to. It's up to you, like how you, again, like to see the market, how you see the market, what your experience is like with the market. So here we've broken this high. I could look to scale in if there's an opportunity. And here we get tagged out for 3.12%. So I just grab my call out. Let's do plus 3.12%. Looking at market nature now, we're in a corrective looking market at the moment. We'll see what happens. So we're pushing down. Got this wick, not interested. Let's just continue. We've got the push down. I'm looking to see if we can get like a flag to the downside. If we break the high, get in on the retrace. And we break the low. So this is sort of market that I'm not looking to get into. So just looking at the structure right now, it looks very descending on a structure level and at a candlestick level. So what I mean by that is structurally, we've got this descending, more likely to go up, since we've also came from somewhat of a push up. On a candlestick level, you can see that we are breaking lows, got a wick, breaking lows, retracing, and we also got these rejection wicks. So my thought process is, again, push up, we break out of this area, and then either get a retest or get a flag to the upside. It's honestly, for me, again, I'm going to say it's as simple as that, but I understand that if you haven't really backtested your plan and then you don't have that confidence in it, then you're going to struggle, and this is why backtesting is actually so powerful. But let's continue. This is really nice. So we see how it's not just an impulse and then a retrace. We're continuing momentum, showing us that the market's pushing upwards. So let's see if we can get a flag or at least a retest. My retest level would be in this area here. So usually sometimes I'd actually have my order set just above, a couple pips above, but in this case we'll see how price reacts. And I'd actually get into this trade right now, because what happens, again, psychology of the flag, it's not a clean flag, but what essentially is happening is that we had this low and then we pulled back. So what happened was they had that push and we had this retrace candle, and then we ranged around, came down, pushed back up. Now there's a lot of psychology in terms of liquidity here on the lower time frame. I won't go into it too much detail, but essentially where I get in is at the retrace candle. So this bullish candle, I get in with 15 pips, and let's see what happens. Wow, okay, we continue. Set that obviously to, with big candles like this, I move to break even, or just above break even, and let's see what happens. This is another entry, because look, we pushed up, have this candle, but in this case this retrace candle has already broken. So where I'll trade my stop is here. Let's continue. This is looking ascending now. You can see there's a massive difference between trending and then corrective. With trending, price moves like this. Whoops. With trending, price moves like this. With corrective, price moves like this. This is based on like a 1 hour time frame, because things do change when you change time frames. Okay. Ugh. I don't know how long I've been filming. I don't know if it says it on the camera. 25 minutes. So this is sort of where I start losing a bit of focus. So I'm gonna take some water. So we're taking a quick nut break. Just eating some cashews and peanuts. Drinking some water. yeah, it's about, hold on. It's been about 25 minutes that I've been in here and I've been talking you guys through it or talking to myself. Actually, a great way to forecast or backtest is literally talk to yourself, either in your head or out loud, because it's like, you know, you're just getting your thoughts out there. Even better if you film it. There's a great tool on TradingView, which I'll put it up on the screen, where you can go and record yourself and you can put it on private. I've been doing that for a bit. Where you record your forecasts or your trade recaps or your backtesting, and then you can compare your language to how you're analyzing and forecasting the markets in 1 month or 1 year, and then later on. Right, I'm ready. Let's get back into it. So, quick update on how we're doing so far. 0.4%, 3.12, 5.72. I'm not even going to try and do the maths on that. So, yeah, actually, you know what? Let's clean it up, because this will be a good thing to take note of. What I do is press Command, or I think Control if you're on Windows. And I'm just going to drag across all of this that I've done today. Click on my object tree down here. And I'm going to click on the new, create a group of drawings. So create a group of drawings, and we're going to call this, what is this? October 2019. We're going to lock it and we're going to hide it. We can toggle this down, and there we go. Now, what I do after I'm backtesting is I go through my entire week or month, whatever I set out to do, of backtesting straight before I actually plug in the values and do my own screenshots and whatnot. So if you want it, if you're starting out, you can obviously put in, you know, notes of like, this could have been an entry, or you know, this is a descending. You can leave on your trend lines if you wanted to. Then I'll go actually screenshot them and then do my ASR on that, and like review what went well, what went right, my criteria for the actual trade itself. And that's pretty much the sort of workflow when I'm backtesting, and hopefully you guys sort of see some insight into my thought process of the markets and how I'm trading currently. Obviously there's a little bit of refinement that I've made, which I haven't 100% shared in the video, but this is a good starting point, and hopefully it was helpful. Hey guys, it's Future Hannah here. I'm currently just editing this video and I realized I forgot to end the video, so I just wanted to say thank you guys so much for watching. Again, I've left links in the description for the strategy that I used in the video, TradingView, and my Notion templates. And again guys, if you like the video, let me know, give the video a thumbs up, and I'll see you guys in the next one.